What's up, everybody? Taylor Welch here, co-founder of WealthCap Holdings, and I am with our investor and my friend Sam, who you can't tell by looking at him, but he just had a baby, and he's a dad, living that dad life. Where you live right now?
San Francisco.
San Francisco. Expensive quality of life out there.
Yeah.
But Sam came in, and he's one of our lenders for the holding company and the fund, and I just thought that we could hop on for 15, 20 minutes, talk about your story, a little bit of your experience and being a partner with the company and what you're looking to do next, and any stories that you want to share. The first and foremost, why don't you tell us like what you do? You're a business owner. You're a very successful business owner. Tell us a little bit about your background story. What do you do?
Yeah, sure. My business is called Wall Street Mastermind. It's pretty unique niche, but I help primarily college students right now, but also MBA students get six-figure jobs on Wall Street, working investment banking basically. So that's my offer. It's like super competitive to get in, but we have a phenomenal success rate for our clients, like over 90% right now. So it's been going really, really well.
It's awesome. I love that because I think one of the things that me and Chris Evans are passionate about is helping entrepreneurs who are very good at making money, but don't necessarily have a ton of experience. And, what do you do with the money after you make it? You know the stories, the horror stories. You leave it in a bank, it's losing 3% a year due to inflation. And you've learned the ins and outs. I think you come from a finance background, correct?
Yeah, I started out my career as an investment banker. Then I did a couple of years of private equity, which is why I'm doing this now, because it's kind of like just what I know. So yeah, I'm a finance guy through and through.
Yeah. So you understand the game of how money is counted, and now you've learned the game of how money is earned. And then now it's cool to see you come full circle because you are actually involved as an investor to keep your money growing. What was your experience before WealthCap specifically in real estate lending?
Lending, zero. So this is my first time on the debt side anyway.
Nice. Okay.
Yeah.
Were you helping people who were investors before? Like that was kind of the side of the fence you were on?
You mean when I was working on Wall Street? So I did banking for 3 years, but that was like, I was a technology investment banker. So we're advising, the Facebooks, Apples, Googles of the world, right? On capital raises and mergers and acquisitions. Then when I was in private equity, interestingly enough, actually my private equity fund, we had a pretty big real estate PE like group, because our whole thesis in PE was we only invest in asset-backed businesses. I personally was not working on the real estate side, but I had exposure to it. I was again on the technology side, so we invested in like data center companies and things like that, which still has a real estate component to it. And then after that, I worked in Silicon Valley for a couple of different tech startups. I worked for Square. I worked for GitHub, which was acquired by Microsoft last year, and then I started Wall Street Mastermind. So like again, no real experience on the real estate lending side. I had invested in some real estate, very limited, but I consider myself pretty much to be a newbie. Like I'm asking Taylor stupid questions all the time. So.
They're not stupid. They're not stupid question. He's basically just saying, "Hey, how do I get more rich?" I'm like, "Hey, here's how you do it." I mean, but that's great. You probably saw a lot of cases of the volatility of startup investing. I mean, just thinking back to like WeWork and the volatility of companies like PayPal and Square, and you probably saw people invest large sums of money and then lose it all the time. I think that's one of the biggest risks to the high yields game.
Absolutely. Absolutely. I mean, even because I live in Silicon Valley, obviously. So even now that I have money to invest, like, yes, I'm trying to diversify. And so I'm putting some in real estate, right? And I think that's, a great asset class. I also do like angel investing, which a lot of people will say is silly because the returns on that is very hit or miss and most people lose money, right? So yeah, I definitely know what you mean in terms of like the volatility, and just if you want the high yield, a lot of times you're taking on a lot of risk, right? I almost put money into like a VC fund recently as an LP, and I was doing my due diligence, and then like at the last minute, I was just like, I just pulled out because it's like, I'm going to tie up my money for at least 10 years in this fund. And honestly, in VC land, unless you're like the top 10 or 20% of the funds who are making like 80% of the profits, everybody else is either breaking even or losing money, right? And
Yeah.
I have confidence that this fund specifically, it's not like an Andreessen or Sequoia or, you know, Kleiner of the world. And so I just pulled out. I was like, I have better places to put this money in, like, for example, in wealth cap.
Yeah, exactly. Yeah, it's like you can promise anything, but push comes to shove. I feel like, at least for me personally, I would rather play my odds in relatively steady yet competitive growth curves like
Yeah.
real estate rather than, you know, the potential upside of a 700% return, but you could lose everything as well.
Yep.
Speaking of due diligence, I'm sure there were some concerns. You had to do your due diligence with us. What was that process like? What were maybe some of the fears you had in the back of your mind? And what are some of the things that made you feel safe, you know?
Yeah, I mean, to be completely honest, fears in the back of my mind. I think obviously Wealth Cap is a relatively new company, right? So I think a lot of times before people invest large sums of money in something like real estate, they want to see, you know, a track record, and or they want to just know that these people can be trusted, right? I
Yeah.
think for me, although Wealth Cap was new, I mean, I have been following Taylor and Chris for a while. Like, I know that they run traffic and funnels, which is obviously humongous. And I don't know how many tens of thousands of followers you guys have online. I know you guys run like other very successful businesses, right? Which doesn't necessarily mean you're good at real estate, but at a minimum, I was like, hey, I'm lending these guys money. I don't really care if like the real estate does well or not, as long as they can pay me back. And like, even if the real estate size doesn't do well, like these guys make a lot of money in their other businesses, and that's also kind of it's like wealth cap is being secured by, you know, your other sources of cash flow or whatever. And at the end of the day, it's just like, and the other thought people probably have is like, who are these guys? Are they scammers or whatever? And it's like, well, obviously they're not scammers because like they're like a lot of people know them, and I personally know other people that know them, and I don't think they're gonna run away with my, like, honestly, the money that I loaned you guys, it wouldn't be worth the trouble or your reputation to like do something stupid with it, right? So it's like at that point for me, I don't know, and maybe I'm um I don't know. I like to consider myself like an easy buyer or whatever you want to call it. But I think you attract the type of behavior that you exhibit yourself, right? But anyway,
Yeah.
I was just like, as an investor though, like I'm not saying, hey, I just went into this deal because I'm easy. Like, I actually don't think from an investing standpoint I'm easy at all. Like I said, I pulled out of the VC deal, but like I evaluate every opportunity um, like a professional investor because that's my training, right? So it's just like, what is the risk? Like, here's my favorite quote from Warren Buffett. He says, "Price is what you pay, value is what you get." Right? And
Mm-hmm.
so I look at what's the risk. There's always risk, right? But what's the risk? And in this case, I feel like the risk is pretty low given everything I know about Kristen Taylor. And then what's the reward, right? The reward in this case is, hey, I lend you guys some money and I earned whatever, like 3, 4, 5x, whatever it is, like over what I'd be earning in the bank, right? And this is not like, by the way, you guys aren't even positioning this as, hey, like give us your money and then we're gonna get you, you know, like crazy VC like returns. You guys are just saying like, hey, if you're making a lot of money and you got a bunch of money sitting in the bank earning nothing, or in fact losing value because of inflation, you might as well give it to us um, and earn way more on it, and it's still somewhat liquid, right? Like it's not like a VC fund where I have to tie it up for 10 years and not be able to touch it if I want to, or it's not like a 401k or IRA where I have to like tie it up and not be able to use it if I want to. Like as a business owner, I understand the value of liquidity, right? Like if I want to expand my business, if I have another project I want to invest in, whatever, I want to be able to get that money back so that
Yeah.
I can get to work, right?
Yeah.
So, anyway, those are all the things that were kind of going through my head. But honestly, it wasn't that tough of it wasn't that tough of a decision. I think I just had to have like one or two conversations with Taylor and Lance, and then that was it. So
a couple of things to add to that is, like liquidity is really, really important, and you lose it on a lot of the popular investment classes you have today. Yeah, you could put money into Wall Street and the stock market, and you could have liquidity, relatively quickly. You could pull that out, but you could also lose, 10% in a bad week, in a bad month. There's a guy who's invested in Wealth Gap, and he wants to pull his money out because he has to pay taxes, and he wants to pull that out for taxes. And we're like, okay, no problem. We're collateralizing it right now. We're going to send it to him at the end of the month. A couple of things that you pointed on is I feel like people should pay attention to the philosophy of the owners, because, all things aside, me and Chris personally, we've been involved in over 6,000 deals. Over $1 billion has changed hands underneath our management of properties from Memphis to North Carolina. So we do know the game very well. But even if we didn't, what you hit on is so important, because you're actually capturing the philosophy of how we run business, and we don't want to lose money. We actually keep 12 months of mortgage reserves in Wealth Cap for our banking partners, and we keep over 25% of all promissory lending liquid, so that if something does happen, if you come to me tomorrow and you're like, hey, I know my term is a year, but is there any way that I can liquidate this portion? We see ourselves as partners with our lenders, not necessarily arbitrarily taking money, using it to make ourselves money in it. It's not just a means to an end for us. We know that the average value of a lender, the average timeline of a lender, the longer we can get somebody to be a partner with us, the more we're going to do for both parties. Yeah. And so it's really important that people pay attention to what you're saying, because our philosophy is just like, dude, we can't lose money. Yeah. And we know the game of real estate obviously well enough, but more than that, you've got crazy talented real estate people who do not respect the loss of money. It's bad philosophy, good skill set, bad philosophy, bad investment. Right. This is all about that philosophy at the end of the day. This sounds like you connected with me and Chris because we have the integrity and the authenticity and the transparency to show you what's really going on. And you were like, yep, I trust him. Here's my money. Let's earn a return.
Yeah. And I mean, like, it's not really that hard to get a feel for, even if you've never met Chris or Taylor personally before, like, it's not that hard to get a feel for what type of people they are, because they put so much content out there on the internet. Like, you just have to go on Facebook or on their Facebook group or YouTube or whatever. You listen to their podcast, like, you can kind of get a feel for how they operate and how they think, right? Yeah. And just how to think about businesses in general. And so that's part of the due diligence as well for those that are maybe not as familiar with you guys, right?
Yeah. So we haven't lost your money. It's still safe and secured by real assets. And you've seen pictures. It's interesting. One of the things we do for our investors is we send these monthly reports, and you get those, right?
Yep.
It's actually something that I decided to do because my first experience being a lender, which I recommend everybody, if they are new to real estate, if they've never done anything in real estate, become a lender first, because that'll show you the game. It'll show you the landscape. My first experience was I loaned about $250,000 to a real estate company similar to ours. And dude, I never heard from them. Like, literally, I couldn't get a hold of them. They were sending me checks every month, but the connection was important to me because it made me feel safe. It made me feel like I was a valued part of what they were doing. And so I said, I'm going to make this decision when we start allowing partners to come in and, lend to Wealth Cap. I'm going to communicate with them all the time. And we send this monthly letter, and it basically says, here's the houses we have under management. Here's basically our portfolio value. Here's the returns we're getting. Thank you so much for being, partner with this on what we're doing. Do you enjoy getting those? When you get it, does it make you feel like, oh man, this is a good investment?
Well, I mean, yes, I do enjoy getting those, but let's be real, Taylor. Like, you love writing letters and memos. I have like, I get like 3 different, like whatever. I've seen like all these different letters from you. First of all, for those of you that don't know, Taylor started as a copywriter, so he's just great at writing, right? But no, like joking aside, like yes, I love getting those letters. Like you're right. It gives you a much better level of like you feel like you know what's going on. You want to
Yeah.
have visibility into your investments, right? Like because to your point, like I've made, like I said, I make other investments and whatever. Like I've invested in real estate, I've invested in a restaurant, I've done angel deals in technology startups. A lot of those deals, I don't really have much, if any, visibility. Like I don't get updates,
Yeah.
right? So I just put my money in. It's going to be locked up for like probably at least 5 years, and I hope that at the end of 5 years I get a lot more money back. But like maybe I do, maybe I don't, right? But for something like this, like yeah, like getting the monthly updates is definitely much appreciated for sure.
Yeah. The moral of it is I don't want our investors to have to go hunt down what's going on. I want to, some people, they just want totally passive. They don't want anything to do with it. And man, every month you log into your bank account and you see a wire transfer from us, you know, and that's got to feel good. But some people are like, man, I want to see pictures of the houses that my money is helping to secure. And we're like, we're going to make that happen. Speaking of wire transfers, you know, you talked about earning a multiple of what it is sitting in a bank. You're actually losing money in a bank. If you have Bank of America, they're paying you 2% maybe on a regular checkings. Inflation is losing 3%. So you're likely negative unless you figured something crazy out.
I think it's closer to 1% actually, but yeah, anyway.
One and a half, something like that.
Yeah.
So it's an infinity return because you're going from losing to earning. But people work hard for their money. They spend their entire careers sometimes slaving it out. Obviously, being in Silicon Valley, you see this. Like, it's like 7 days a week, 15, 16 hours a day. How does it feel to be able to switch things around and the money you worked so hard for is actually working hard for you now every month?
I mean, that's what you have to do though, right? Like, I mean, anyone that knows how to think like an investor, like you look at all the wealthy people in the world, none of them became wealthy through just like working, like through, I mean, yes, they all worked hard, but
Yeah.
like you have 24 hours in a day, even if you're like, I consider myself to be kind of a machine because, I came through investment banking. I'm used to working like 80, 100 hours a week. Even then, like you only have so many hours in a day. So like, if you're just making money by selling your time, um, you're gonna be capped at like with a very low ceiling, right? Like the whole point is like, yeah, work hard, make lots of money, but you got to put that money to work for you and make money with money, right? So like
Yeah.
that's what all the wealthy people understand, and so yeah, it feels good, right? Like that. I mean, I've been working hard for a long time. I've been working for a little over 10 years now. I've done pretty well, and now, for the next 10 years, I'm thinking more about, yes, I'm continuing to work hard. Obviously, there's still a lot more to accomplish, but I'm thinking a lot more nowadays about how do I deploy kind of the money that I've already accumulated. How do I diversify that into different asset classes and basically, generate income just on its own, right? It's passive income.
Yeah.
So anyway, it's leverage, right? You got to have leverage.
Yeah. One of my favorite realizations came a couple years ago, and it's about making time an ally, making time a friend of yours, because so many of us battle against time. And I had this question that just popped into my head, and it was, if I fell asleep for 15 years, would I wake up with more income or less income? And at the time, I was like, that would be terrible, because I would wake up probably poor. I would be out of assets, because everything requires me to touch it and to push things forward. And so that's the day I decided to start getting into the game, and I started taking all of my surplus income and putting it into real estate. And now we're at a place where, dude, if I fell asleep for 15 years, I would wake up rich, because time is my best friend. Things are producing without me. And so many times it's this big, you have to jump over this big hump to get in the game, because there's all this fear and there's all this, like, I've worked so hard for this money. It hurts to part ways with it. Last question for you here is, there's a lot of people that you can choose from to partner with to make your money grow. There's all of these options. You have optionality in who you choose to do business with. When people hate on companies like, you know, the SEC and the FTC, I think they're missing the point. It's one of the best things that ever happened to the investment game is that guy on the back wall going to jail. Like, the SEC regulates for a reason. And, you know, we put a lot of our own money into this fund every month because we believe it's the best thing for our clients and the best thing for us. How do you judge a person's character, knowing what you know, coming from the game you come from? You've seen all of these people who do things the wrong way for self-service. How do you make character decisions? And how do you get to a place where you decide, I trust this person versus I don't?
I think the biggest thing is just there are a lot of companies out there, and I see this in my own niche too, which is like a lot of my competitors, the way they do business is they're really only thinking about what's good for them, right?
Mm.
And so, like, what's good for them, for example, in my industry, the analogy is what's good for them is selling a bunch of low ticket stuff because we're targeting college students and they don't have a lot of money. But because they're selling low ticket stuff, they're not providing any support. And most of the college students that buy their stuff don't actually get jobs, right? So, but like, it's easy for them because they're sitting on a beach somewhere just, you know, collecting like hundreds of dollars from tens of thousands of college students or whatever, right? But like, that's not really, like, as a client or as like a customer, it's not really in your best interest, right? And I think that, like, when I was looking at Wealth Cap, like, again, you know, Chris and Taylor, I know they run traffic and funnels. They have, and I've seen like the case studies and the client testimonials or whatever for their other businesses, right? I know, and personally from running my own business, and I have a lot of testimonials myself, I know what it takes to have that type of results for your clients. Like, you have to really, really care about your clients. You have to like put them first, right?
Yeah.
And sometimes that might be inconvenient for yourself as the business owner, but like in the long run, if your clients are doing well, you're gonna do well, right? And I feel like that's kind of how Chris and Taylor operate, and that's the type of people that they are. So, you know, I believe that was also going to transfer over to Wealth Cap, which is, you know, like, they're not, I think, unlike a lot of the other real estate businesses out there or whatever, they just operate on a different model, right? They're not, yes, like, obviously they're in it to make money themselves, but they've thought about this, I think, in a really innovative way where it's a win-win for both them and the clients, right? And so I think that's pretty rare. And, you know, you guys should do your own homework, but that's the conclusion that I came to anyway.
Yeah, 100%. The reason we made this for people is to help them do their own due diligence. I'll never advocate somebody jumping into something blind, but you've probably heard me say this before. I want to partner with people and help them do their due diligence. I don't want to make it hard to find out what we're about. I don't want to make it hard for them to find out what our morals and our principles are. So thank you for spending a couple minutes with us just to make it easier for people to decide whether this is for them or not. And obviously, we're going to keep growing your money as long as you want to have it here. And thank you for being a part of what we're doing.
Yeah, man. I was like, I don't want to do this call because then more people are going to want to come in and then I can't put my money in. Like, no, but seriously, though, I'm happy to do it. It's a great opportunity, honestly, everyone. Like, if you guys don't do it, I'm happy to put more money in. So, you know, either way, Taylor and Chris are good. So
awesome. Guys, if you're watching this, you want to set up a call, there's a link somewhere around this video. We have SEC accreditation. We are doing it right. We are the good guys. And I think you're going to see some incredible things from us over the next few years. Might as well get in at the ground floor. Thanks again, Sam. See you guys later.
happy to do it.